This is Robert Kraft, and I'm your host on SNN.Network. And joining me this morning is Chris Dobbin. He is the president and CEO of Nova Leap Health. It's a publicly traded company. I got two symbols for you: NLH on the TSX Venture and NVLPF on OTC. Chris, great to have you on. Thank you for joining me.
Hi, Robert. Thanks for having me. Appreciate it.
I appreciate it. And thank you again for participating in our virtual event that we just had a couple weeks ago. I invite everybody to go check out your presentation, which we have on our YouTube channel. So again, thank you for that.
My pleasure. It was a great event. I'll welcome the chance to participate in future events.
Awesome. Thank you. All right. So for this is our first time doing an interview together. So what I like to do in these types of interviews is get an overview and history of the company first, and then dive a little deeper. So
Sure.
Chris, the floor is yours.
Yeah, so we're in the home health care space. By way of background, would have been many, many years ago, my father-in-law was diagnosed with Parkinson's. We had seen a deterioration of him quite rapidly. And during the latter part of his life, my mother-in-law had home care for him. And so, we saw sort of the good and the bad of home care. The bad, maybe the first home care agency that was in there, really, really nice people, but not properly trained. And so that agency was sort of fired in the first day. And then my mother-in-law had an agency in there for the better part of 2 years. Again, really, really nice people that provided the care, the caregivers, but there was a bit of a gap in terms of the perhaps a lack of dementia type training. And so we noticed that, and about nine or 10 months after he passed away, my wife and I saw an opportunity to acquire a home care services business about an hour outside of where we live in Nova Scotia. We bought that business, and then it just really opened our eyes in terms of what the demand is and what it will be for the next several decades based on demographics. And so, we looked at different ways to sort of tap into the market and bring a dementia type focus to bear. And we ended up going through the CPC program in Canada. So it's a fairly streamlined way to go public. Went through that process back in 2016. And then since the latter part of 2017, have been really actively acquiring home care businesses. So a number of operations throughout New England, Oklahoma last October, and then most recently, earlier last month, we went into Ohio with a new startup location. So, pretty diversified from a geographical perspective, but still a very small publicly traded company at this point.
It's interesting. I've actually interviewed a few Canadian and TSX Venture listed companies that have been employing this roll-up strategy that I've been seeing. So can you explain that a little bit more? And then also what makes the company unique and different compared to some of your peers out there?
Yeah, I mean, for a roll-up strategy, really what we're looking for is small, independent, so non-franchised home care businesses. And we started in New England, obviously. I mean, these are typically companies that are generating anywhere from $1 million, say, for a tuck-in that we do, to $3.2 million. So really, really small businesses we're talking about. And generally, they're owned by an individual that's looking for a succession plan. And he or she, and generally it's been female, has grown the business from inception. 10 to 15 years old, again, small revenue base, good reputation within the market, great office team that's employed, that stays, and then the owners, again, looking for that transition or exit or succession plan. And so, generally those are the types of businesses that we've been looking for. So, we're in Vermont, New Hampshire, Rhode Island, Massachusetts, Oklahoma, Ohio, and Nova Scotia. In terms of what makes us a little bit different, one of the things happens to do with scale. And so generally these independent businesses don't have scale, right? There's really a lack of scale. So they, either by choice of the previous owner, either from a strategic choice or from perhaps a lack of capital, the owners decide just to stay within a fairly restricted geographical area. And so, we expand on that. So by bringing together a number of small businesses on a larger platform, we can leverage technology, we can consolidate our back office functions. We tie our scheduling system into our billing and payroll and accounting functions. And so it just gives us some leverage that some of the smaller entities wouldn't have. And quite honestly, in an environment like this, when we're dealing with COVID, we're a larger organization now than what small independent business would be. And so it just gives us the capacity to sort of either weather the storm or continue to grow, when again, a smaller entity might not have that opportunity. So that certainly our scale makes us very different from what we call the not, the private pay or sort of private duty space.
So tell me a little bit more about the competitive landscape. I mean, are there other Nova Leaps out there that are employing a similar strategy?
You know, from a competitive landscape in our industry, franchises would be the dominant type of model. And really they would make upwards of 75% in the home care space. We've seen the odd private equity firm that's looking at, the home healthcare space or even the private duty space. But usually the companies we're buying are such a smaller size that they're too small for PE firms. So you're generally going to have a very large, privately owned independent company that might come in and try to pick up a brand like we do. You'd have franchises that may want to convert an independent model to be a franchisee. And then the large publics, again, with the companies we're after are really too small for them. So I really like the space that we're in because I think we have lots of room to grow before we become attractive to a larger player, because it is, and they've acknowledged it publicly. I remember going to the home healthcare news function in Chicago there a few months ago, and I think it was the CEO of, I think it was LHC or Medicis, I can't remember which one, and Medicis, I think, and he sort of, was sitting in front of the room and he said, look, we can't buy these companies that are that small because after the owner leaves, what are you left with? And I was sitting back at the end of the room, and I kind of smiled because I said, they don't get it, right? Like they're very good in their space, but they don't know how to deal in our space. And so to me, that gives us a long runway to be able to acquire these small businesses as we become a much larger organization. So, I like the space we're in. I think we've executed pretty well, and we have lots of avenues for growth, down the road.
It's like after the owner leaves, no, there's still a business there.
Right. And that was what, so it was striking to me that's what the comment was made. But again, everybody has their own experience. In our case, we're usually not looking for the owner to stay because he or she, again, is tired and doesn't want to grow the business. We've looked at private equity type deals where we have a scenario where you might have a younger owner and need some strategy and perhaps capital behind him or her to grow the business. But we haven't executed on any of those opportunities. They haven't been a fit for whatever reason. But we would certainly consider that type of opportunity.
Gotcha. All right. So, this interview is quite timely. Last week on Thursday, May 7th, the company announced your Q1 2020 results, where Nova Leap reported a 17.9% revenue growth year over year, comparing Q1 2020 to Q1 2019, despite a 4.3% decrease from Q4 2019 to Q1 2020, primarily as a result of the preliminary impact of COVID-19 for the latter part of March 2020. This is all according to the release. Can you comment further on the company's performance and then your strategy for combating any future impacts from the COVID-19 pandemic?
Yeah, I mean, as it relates to our company performance, I mean, I think, if any of your viewers or current investors or people just follow our story, if they were to go back sort of quarter after quarter, what they would see is improvements around, gross margin and EBITDA margin and operating cash flow. And I think we've demonstrated that really over the last 2.5 years fairly consistently. And so I think we have a good track record, leading up until this sort of the end of Q1. And even, again, I think I alluded to this in a press release, as we went into, March, I mean, we were on track, at least pushing towards sort of record quarterly results for us. So I felt pretty good with where we were from, as we were latter part of that quarter. We've been impacted by COVID-19 and again, I think I indicated that we see that as a temporary decline in some of the hours. In some ways we're going to, benefit financially through some government programs, oddly enough, particularly in Canada. But I think we're well placed. I mean, we just came off a large round for us. We did a convertible debt round in December and January. So we're sitting with the largest cash, position in our history. We're still looking at opportunities. I would say up until a couple weeks ago, sort of from our last board meeting until maybe a week or two before our Q1 results, our shift went from one that was normally externally focused, so always looking at M&A opportunities, always looking at growth opportunities, to an internal focus. And I think that was the biggest shift that I saw, the biggest impact on our organization as a result of COVID. So, looking at the WHO and the CDC guidelines around masks, which have changed really over the last few weeks. Talking to the epidemiologist at the different Department of Health around different scenarios, if they were to result, how do we deal with that? The impact of legislation in the U.S. at the federal and state level. I mean, oddly enough, you have legislation that actually makes it incentivizes certain people to stay home and make more money than they would otherwise working, right? And so, that can be a challenge. So I think our industry has faced some headwinds, and I think other public companies have alluded to that. But again, we see it as temporary, and so we don't have a long-term concern about where we're positioned as an industry. And I think if you think about our industry, right, and you think about COVID itself around and the impact it's had, particularly on facility type settings, depending on where you are, you have upwards of 75% of the deaths are happening at a facility, right? So they attack the elderly at a facility. We provide in-home care. And so we're already in this isolated type of environment where at least you can control who's coming in and coming out, and maybe you don't have the same type of sharing of meal hall or other types of spaces within a facility. So I know we've received some calls, actually as recently as yesterday, just from people looking to move their parents out of facilities. And we're always going to need facilities going forward. It's not about eliminating that, but I think when people look at the choices that exist and they look at home care as a potential, particularly where we focus on dementia care, and that's an increasing number. I think that we're well positioned, both as a company and as an industry going forward.
I mean, that was, listening more to your story and then listening to your presentation. I mean, that was one thing that I actually thought of, here and wanted to follow up on, is this idea of people, their shift in wanting to maybe use more home care services versus having their loved one at a facility. Just, there's just all the news is about, I mean, that's where some of the main spread happened, especially initially, so you must have been getting so much interest in that.
I think the difficulty with the facilities as it stands right now, and again, we're always going to need facilities. It's not about not requiring facilities. We need them going forward. We need them, to operate in a safer environment. And we're hearing about all the negative things, and that's typically what happens in the press. But there are a lot of good facilities out there that are doing a really good job of controlling the spread and not allowing people in, or they close their doors early. So I don't think we can lose track of those companies that have done an excellent job that own facilities. The difficulty, obviously, if you think, here we just went past Mother's Day, right? Well, you can't get in to see mom or dad, right? And I know my grandfather actually is in a facility in sort of adjacent province, not like a nursing home, but just more of assisted living. And because he wanted it for the social type of environment, and his 90th birthday just happened to be last week, and so now you have to go and do the balloons out on the lawn, and he's out on his little porch, right? And it's not quite the same as having a big fat family gathering and sitting around the table and sort of that one-on-one interaction. So I think that's the difficulty these days when people are sort of considering a facility where there's a potential for the second wave and COVID being around for some period of time, obviously. And, you want to run the risk of perhaps not having access to mom or dad. I think that's really the tough decision that comes along with, whether or not you're in home care or, again, go into a facility type setting.
Right. I mean, look, if anything, and you think about this with hospitals as well, is, my wife's an RN, and she's going to be going back to work in about a month and a half. And the one thing that at least gives us some sense of security is that, that all these facilities, all these different institutions are going to be doing their utmost best to keep things clean, have a process, the right equipment. They've been gearing up for if there is potentially a second wave. So, there's some comfort, I guess, in that, maybe a little bit, but
Yeah, I mean, look, PPE's been an issue. I mean, again, going back to our internal focus I mentioned earlier, I mean, it's one of the things we started to look at is, do we have enough, right? Do we have that right type? When are we going to need it? Can we get additional supply? And again, fortunately for us, we've been able to secure supply where we've required it. We don't run a large medical type practice. We're primarily non-medical, and so our type of needs are a little bit different than what um, a home healthcare company may have, for example. Having said that, all the jurisdictions are different, right? We operate in various jurisdictions, and so we've had to keep track on top of all the different legislation. So something in Vermont's different than Nova Scotia, which is different than Mass, right? Which is very different than Oklahoma. Um, but you're right. I mean, it just as long as people, as long as companies or institutions have the right policies and procedures in place, they're being followed and monitored, they have the right protective equipment, then I think obviously you're in a much better place, than not having those things.
Absolutely. All right. So back to some of the more recent news that you also put out. This was back on March 12th. You guys put out the president and CEO letter to shareholders, where you actually outlined a four-phase evolution of Nova Leap. And you also talk about in various bullet points underneath, investing in our people, expanding markets, insider ownership, financing our debt, and the Nova Leap model. You put this out literally right as COVID-19 became an official pandemic. So I have to ask, has anything changed since then?
Not really. I mean, my rationale for putting that out was, people have a sort of a short time attention span these days, or maybe people don't know about our company. They've sort of heard about it, but they want something to sort of read quickly to get up to speed. And so I really needed to lay out how we've evolved. Our insider ownership remains 38%. I think with the exception of maybe one private placement since we started, it's been insider led. Everybody that has any sort of key decision-making power, including our board, are all heavily vested into the company, cash paid. So I think that's been good. I've had a number of questions around our debt, right? Because we're obviously a small publicly traded company, nano cap from my perspective, and so people often grow concerned about debt. But if you think about it from the perspective, we're buying these cash flow positive businesses, and so on their own, you can employ leverage. So I've always felt comfortable with where we are. Although the debt shows as a current balance sheet item, that's not the case. We actually pay it like we would a term loan. So I tried to address that. Our growth strategy remains the same. Would I have normally expected we would have already done an M&A transaction by this time in the absence of COVID? I would have, and I think that's consistent with our track record. Our last couple of years, we averaged 4 acquisitions per year. So obviously, some of those acquisitions now I'd look to be sort of pushing out towards the latter part of this year. We've just grown organically in Ohio. We have plans for 3 new offices consistent with Ohio later this year, and so you should expect to see those. But no, from the March 12th President CEO letter, nothing's changed other than this internal focus on making sure that we've adequately addressed everything internally. But our strategy as a home care organization remains the same going forward.
And I also have to ask about your background. I mean, you went into it a little bit when you were talking about the history of Nova Leap, but prior to founding the company and starting it and taking it to where it's at today, what were you up to?
Yeah, I kind of look at my background as somewhat a traditional background to a certain extent. So my father's a CPA. I sort of followed his roots, and I went the CPA route. I worked for a number of years for Grant Thornton, which is one of the larger firms in Canada. I then was poached by Bank Montreal, one of the largest banks in Canada. I ran a couple divisions within their private banking sector for 5 years. I left there and I ended up founding my own private capital markets investment bank. And so I was advising on larger Atlantic Canadian based companies on their acquisitions. So, targeting, approaching the targets, negotiating the deals, arranging the financing, helping with due diligence. So, a lot of the stuff that very much carries over to Nova Leap. And then obviously family situation with my father-in-law just really opened my eyes for sure in terms of, the impact I think we can have with our seniors. And, I certainly wish I knew back then what I know now about being able to help out and just the different techniques, it would have been quite useful. But yeah, a little bit of a sort of accounting, banking, transaction type background that, we've employed here at Nova Leap over the last few years.
And you've alluded to my last question here throughout our interview, but let's get a full kind of, I guess, sum up in a sense. What would you say are some of the company's value catalysts now moving forward, from what you can tell us?
Yeah, I think two things from well, maybe three. One is, I expect that we'll continue operating the way we've operated, meaning that, good margin improvement, good improvement in cash flow after we've taken over these businesses. So that obviously remains a focus. Two, we're an M&A type firm, and we're going to expect to do more acquisitions. I mean, that's been our approach. It's served us well. And so we'll continue with that. And three, really the opening of new office locations. And just put in perspective, when we open a new office location like we did in Ohio, it takes time to build the client base. And so we actually don't expect those offices to break even for probably a couple of years. And so it's really about sort of planting the seeds and letting that grow over a couple of years. But a pretty low capital outlay for us. It doesn't take a lot of cash. Again, if we've hired the right people in those particular locations to grow the business. And so we think it's a good allocation of capital. So really between, continuing with our operational excellence, our M&A strategy, and opening new office locations, I think those are the three value creators for us going forward.
Got it. And one final question. I mean, are there a lot of Patriots fans in Nova Scotia? I mean, look at this background right here.
Yeah. I put that for some comic relief. I'm on these Zoom calls a lot, right? And I had this blank wall on me for so long. I mean, think so. I'm based in Halifax, Nova Scotia, and we don't have a professional sports team. And so a lot of the sort of the generation before me growing up were Boston type fans, whether the Bruins or Pats or Celtics, for example, because that's sort of the closest major city to Halifax, and there's a bit of relationship between Halifax and Boston. It goes back about 100 years. So yeah, lots of Pats fans within the area. I don't know how many will be Bucks fans now, but I get lots of comments on that.
That's good stuff, man. All right. Well, with that, where can my audience go and find more information about Nova Leap?
Really, our website, novaleaphealth.com, or the TSX Venture Exchange. Either of those would probably be the primary sources, but certainly our website has all the information you need at this point.
Perfect. And what's the direct URL again?
NovaleapHealth.com.
Perfect. All right, Chris, thank you so much for joining me. I really do appreciate it. Stay safe. Good luck. And I look forward to our next chat.
Thanks for having me. Appreciate it.